what strategies do you use for your stop losses?
So stop loss would be, so all in, all out, which is, so I enter the trade, my stop stays where it is, and I get out at my predetermined target. Depending on the strategy and what I've tested, again, to keep it very simple, if I'm 50% of my target and the price action that I'm seeing is favourable based on what I've tested, then as I've said, I'll move my stop up 50%. If I think that market has the opportunity to run further, then I'll move my stop up to break even once 2-to-1 is reached, rather than take profits at that point. Or I might move my stop to break even, take some profit at 2-to-1, and then if the trade's running really well and I'm up at 3.5-to-1, then I have another strategy where I can slowly move my stop up to lock in profit. But that tends to be something that I'll only do if the overall conditions suggest that, I've predetermined it, and then the market's corresponding how I want.
Do you use partial closes?
Yes. So again, it will depend on the trade, it will depend on the overall scenario. But again, I will always have a target, and I always say to traders, have a target, and at that target do something. So I'm either taking all of my trade off the table at 2-to-1, or I'm moving my stop up to break even, or I'm moving my stop to break even and taking half my trade off. But I'm only taking half if I believe overall that I think it can run further. So yes.
Is using trailing stops a good idea?
It is if you've tested it and it works and you're happy with it. I always say to people, even the best risk management strategy will look like the worst risk management strategy at a certain point. So you can be in a scenario where a trade has reached 4-to-1, let's say, and the scenario there is, what do I do at 4-to-1? Do I take this and bank 4 times what I've risked? Or do I move my stop up to say 2.5-to-1, see if I can give it some room, and then the trade move on? And the problem is it could go either way for you. So I would say if you're going to trail stops, make sure you've tested it. And that doesn't mean that going forward every trade will work as you've tested in the past, because there'll be a random nature to what happens going forward. But if you've got some testing results, if it works for you, then great. But on the trades where you've sacrificed taking 4-to-1 and you've only moved your stop up and it stops you out at 2.5-to-1, then at least you know that over the long haul there's some testing results to back up what you're doing.
So let's talk about cutting losing trades. So a lot of people will make money on a trade and then it'll start losing, but then they'll keep hold of it even though it's losing. What are your thoughts on that?
There's 2 elements to this. So there's the classic one, which is trading without a stop loss. So trading without a stop loss, so you hold on in the hope that it will turn around. So you're using essentially an investment-based strategy, which is buying shares for the long haul, holding, waiting for them to turn around. You're using that same strategy on a trading scenario. So in that scenario, that's an absolute out and out for me no. Every trade should have a stop, because it's too easy to just let the trade run, and before you know it, you've wiped your account or 50% of your account on one trade. If you are using a stop, the first element that I've seen the people do, and I've done it back in the day, where I've moved my stop further down. So price is going against me. I felt really strongly that market's going to go a specific way. So I've edged my stop. I've widened it. So again, all I'm doing is increasing my risk and I'm breaking my rules. So I'm conditioning 2 things. And the worst thing that can happen in that scenario is that you widen your stop and then the trade actually goes the way you intended and hits your target, because then you've conditioned a bad behavior with a positive result.
Do you ever do something in your trading that you know you're not supposed to do, but you do it anyway, and then do you regret it later?
I used to. I would say the frequency of that was a bit 80-20. So I was breaking my rules 20% of the time, and it was having an 80% impact on my results. So now and again, it's more a mistake now. I would say the only time that I say something and do something I shouldn't is around Friday trading. So I'm very much to my students, no, I don't trade Friday, possibly up till 9 o'clock on a Friday morning. And then a couple of times, Sarah's great, she sort of pokes her nose into the trading room and goes, you're still here. And it's her subtle way of saying, you tell everybody you're done by 9 o'clock and it's 11:45 on a Friday. So I would say that's probably the rule that it's not an absolute rule, but I put it out there that I don't trade past 9 o'clock and I can find myself in front of my screens at 11 o'clock.
How can traders stick to their rules and not break them?
Well, I wouldn't have a training business if they did, because that's ultimately what I do. The misconception is that I'm spending hours and hours and hours teaching in-depth technicals. Most people, once they've got their strategy and they've carved it out and they've tested it, people pick up technicals fairly quickly. Yes, there's always something new to learn, but they pick up their strategy. If people could stick to their rules, then ultimately, assuming the strategy works, they'd be successful. I think the main one is greed. The greed and fear, so their emotions, the random nature of the results. So let's say they've tested 500 trades over a year, and that gives them a positive win-loss ratio and a positive risk to reward. But what they probably haven't looked at is at what point was that strategy losing? What was the worst losing period during that year? And if they look back, they go, well, I had 8 trades on the trot where I didn't have a winner, or I had a month and a half where I was having winners and losers but wasn't making any money. But they look at the overall result of the year, and then they essentially put that overall result on the result of every individual trade. And they don't bother to look and go, actually, there were a lot periods during that year where I wasn't making any money, or I wasn't hitting my numbers. So I think the fear and greed then kicks in. So they know rationally what to do, but the result is not happening. And I think also, if a trader's winning and say has 5 or 6 winning trades on the trot, it's very difficult for them not to then look at imagine the next 4 or 5 trades doing exactly the same thing. Another one for day traders is boredom, and I know this from me. Boredom was the big one for me. It's like there's nothing happening, the markets are sideways, but you sit there because maybe it'll break out in the next couple of minutes. And I got to the point where I was like, if there's nothing happening, walk away. And then my brain would go, yeah, but what if something does happen when I'm not there? Well, okay, I've missed a trade. So I think it's fear and greed and boredom. If traders could manage those, they would be better at being disciplined. Because everyone hears traders say, well, you've got to be disciplined, be disciplined. Well, everyone knows that, but 90% of them aren't being disciplined. So look at what is influencing you. Is it fear? Is it greed? Is it boredom? Is it frustration? What's your trigger? What's the thing that causes you to break your rules?